Hello, everybody, and welcome back to another podcast with the crew at Farmers Trading Company here. Currently April 3rd, I'm sorry. It's been kind of a wild week in the commodity markets with the report last week in the grains and then the avian flu in the cattle. It's really made things go crazy. I think we'll switch up our order on this podcast and start with that cattle market, Vince. What are your thoughts here with avian flu? Was it knee jerk? We had a couple ugly days there, but overall, it seems like it's stabilized. And then today we're lower again. What are some numbers to keep an eye out on that market? And what are your thoughts with that?
Well, the initial thought was you were hoping you could hold Monday's lows, which you did not. Good part about it is we did come back and take out those lows, and there wasn't much selling. So I think that created some buying, and we're just going to have to chop around and get some confidence back in that speculative buyer for him to come back into that market. Is the avian flu there? Is it real? It is. And is it a big threat? I don't think it is. But like so many things, the press keeps pushing it. Whether they get something done, even though they're saying it's not bad, well, then let's forget about it and see what happens down the road. And part of, I think, two other things looking at Wednesday's sell off, if you look at the sales numbers that were plugged in on the feeder cattle index from Tuesday's sales, they were down right at $14 from Monday's sales. Didn't help. And that comes out early in the day if you get the private numbers. And there's also talk of two or three different states that were going to restrict the flow of dairy cattle in and out of the state. So all those makes people a little bit more nervous. And well, if it's nothing, why are you doing this? Well, it makes perfect sense just as a precautionary situation is all it is.
Mm-hmm. And then I guess Andrew, looking at the charts technically, looking at some retracements and different things, what are support levels here that a guy should watch for other than I know Vince said the low from a couple days ago, but any other support levels or things on those charts?
Yeah, a couple days ago, lows, of course, that will be a critical number within this market. It's nice, we did break below that at one point today on fats and feeders, but then you did come and close above it. So hopefully it was just trying to scare a few people, and that's all that it was. Like a lot of people say, fundamentally, we still have the numbers out there for cattle that can take this thing higher in the longer term. But whether or not we continue having issues like this that scare out the spec traders is the biggest one there. Like a June live cattle, we're right at the 50% retracement there. Could it back up to the 62? That'd be $4 lower than we are right now, $4.50. That seems to be a very big congestion area within the market. So I don't think it would hurt the market a whole lot from a bullish viewpoint to have it go down that far. And then as far as like a May feeder cattle go, from the December low to that high that we had in February, we made it just shy of 50% retracement. So could you take that thing down to the 62% retracement, which would be another $8 lower than we are right now? I think it's a possibility. Don't really want to see it do that, of course, but anything is possible in this cattle market. Stochastics are leaving room for this thing to go lower if they really want to.
Mm-hmm. And one note too about the bird flu, I guess when I was talking with a producer here a couple days ago, he was kind of curious on why. I know it's a big scary headline, but why is the market tanking? Wouldn't you think that if livestock are getting sick, that there might be a reduce in the herd size again, and that could maybe help demand? I don't know. What are your thoughts on that, Vince? Is it just so knee jerk, and that could maybe in the long run come
I
back
think
around to help?
I think we all have to remember a couple of things. A number of years ago, I went to a presentation that a bank did with Dr. David Cole, who's an economist, and I'm not a fan of economists, but the first comment out of his mouth that impressed me was that economics is not about numbers, it's about human psychology. And I think the same thing applies here. The trade could take it from a producer's standpoint. We may take it as well, geez, if we got problems, we're going to have less cattle. The other side of it is the consumer perception. Oh, does that mean that I can get it as a human, or what does that do? And it backs people away. And anytime there's an unknown out there, people are going to get scared and liquidate positions, whichever way, if they're on the wrong side of that thing, to see just what may transcend down the road.
And another note, I guess, from our monthly meeting yesterday, one of the hot topics I guess we talked about was importing cattle and how many more cattle are getting imported from Mexico and how much of a discount those cattle are coming across the border at. I don't know, is that something you see in the long run becoming something that affects this market, Andrew? Or what were your thoughts with after hearing that last night with that information?
Yeah, so it sounds like it's been happening for a while, the last several years anyway, anywhere from 1 million to 1.4 million head coming across the Mexican border every single year. And the real question is that scalable? Can they do it in a bigger way if the US market demands for it? I don't know the answer to that right now, but can they get to just shy of 2 million head of cattle a year or something like that? Can they scale this thing to take care of even more issues down the road? Because if we're still doing the same amount we have the last few years, then we're not solving our problem. We're just kicking the can down the road. And so we'll have to keep an eye on, is Mexico going to scale that production and scale those imports more numbers into the US going forward?
Mhm. And then overall, big picture with both the cattle markets, Vince, would you still remain in that more bullish or favorable conditions here long term, I guess, in the next couple of years, cycle wise?
I think you have to be fundamentally friendly because of the numbers out there. But when you look at the scare that we had last fall from September to December, and now you come in here and you see the scare that we had last week, and we had on Monday again because of the avian bird flu. I think a producer, if unless he's got very deep pockets and he can absorb some losses, the next rally you get here, I think putting some type of protection in place, not on everything, but have something there if you don't have something. Because as we've noted before, it's not what you know that's going to hurt you, it's what you don't know. And we've had 3 of these surprises now in the last several months, and those could be the things that really keep us from going where we should.
Mhm. And then I guess we'll move on to the hog market, Vince. Um, could this be, I guess, this bird flu scare, could this be something that maybe switches demand more towards that pork side of things for the consumer? And then I know we also had a hog report out here in the last week, Vince. What were the numbers from that, and how do you think that will make the market react?
The hog report was a bit negative, and they cared about it probably the first 5 to 7 minutes on Monday morning, and that was it. Why? I think one, it maybe wasn't quite as bearish as some of the bears believed it would be. I think if you look at the commitment of traders report, you will see that the hog producers are record hedged, which is a little scary, especially when the market goes higher. And I think the other side of it is over the last 4 months in that hog market, you have went from terrible demand to excellent demand. Last week's cold storage report, and again, whether you're talking beef or pork, we're focusing on pork, but they were both down 12% on freezer stocks year on year. And I think all that adds up to the market knowing that as we get down the road this summer, we're going to have tighter numbers in those hogs. You don't see it producers enthusiastic about building more barns, building that herd as we did for 10 or 20 years, just because they've had some tough financial times, and maybe it's time just to stand back and enjoy a few good times before we get too big.
And then on those charts, Andrew, is there anything that you've been seeing or that's notable, I guess?
Yeah, as far as noticeable, I want to say it was a couple weeks ago we talked about maybe we had a 5-wave uptrend in this hog market, and we're just about there to completing it. If that's the trend that it was doing, it's hard to say exactly if that's the route we've been taking. As far as the rest of the chart goes, there's room on our stochastics. There's room elsewhere on the chart for this thing to continue to push higher. So I think a person needs to be cautiously optimistic with this thing. If I was a producer, I wouldn't be not hedging. I think you got to protect yourself, but I do truly believe that there could be some more potential within this market. You look at like a June hog last week, or was it 2 weeks ago already? You went down to the high 98 level area, and that held it up very strongly at a point on the chart that I thought it would drop another couple bucks, and it didn't. And they're rallied back north of $100 again on the futures market. So it looks like it should be a healthy market, at least for the near term.
And then moving on to the grains here, looking at the corn and the wheat markets, they've been an interesting trade after the prospective planning report and the bullish news for the corn market. It seems like they took all that away in a couple days, which was kind of humbling for us traders. But then today ended up being an all right day in that market, Vince. Was this more of just a bear trap here that went on in the last couple days and we're going to be okay? Or do we need to wait for more news? Or what are the thoughts, I guess, big picture going into planting here with the grains and especially the corn and the wheat markets?
I'm not sure I want to consider it a bear trap. I think it was nothing more than when we got the report done, people began to look at it closer and see that there was several million acres that weren't accounted for. And they rent when the question, where are they from? Where did they take them from? What don't we see? Well, they surprise us down the road. So I think you had that working on you. And then Tuesday morning, when you could not get a rally going, I think you just had more of those people that probably bought on Thursday of last week after the report saying, let's get out of here while we got a little bit of money. They did hold right in that area of last Thursday's lows. And again, let's keep in mind that was 50% retracement of that whole move up. We did change some trends last Thursday according to how we do it using that 37.5 cent roll off of a bottom in the front three contracts. What would you normally see when you do that unless you got an exploding market? A 15 to 25 cent pullback. And that's what we got.
Mm-hmm. And so I guess what would be the news then that's got this wheat market so excited? It seems like that's kind of been dragging the corn down and then helping pull it up and seems to be kind of the driver. And is that just technical buying and selling, Vince, or is there more to that?
I think it's technical buying and selling. There's really no place in the world just like corn that has serious problems. There's some things in Europe that could be a problem, but not yet. But as we've noted in our monthly meeting last night, and one of the things that you try to watch is over the years in that grain complex, the wheat is the first one to put a bottom or a top in, corn follows, and then beans does it lastly. So the point being is that if we continue to hold that March 6th low on May Kansas City wheat, I'm not sure. I didn't look at Minneapolis and Chicago and see when those lows were, but we need to hold those lows. If we take them out, one has to believe that corn and beans are going to continue to put new lows in.
And then going over to you, Andrew, what would it take, I guess, what news would have to come out for us to be able to take out last Thursday's highs there that we had after the report? Do we need more news or can it just be done on technical trading, or is there, I guess, what should a producer look for in that market?
Yeah, it certainly could be a technical trading, but I think we just need some more time to digest some of this info here. You look at a commitment of traders, the managed money is net short 250,000 contracts of corn right now. So even if they just unwound some of that short position, they could be buying this thing back up to last Thursday's low. But I think you also just need to realize that right now, now that we have that prospective plantings acres come out, until we can really start getting the planters rolling across the majority of the Midwest, there's not really any great cases that you can make for pushing this market one direction or the other, short of a big world event or something else like that going on here. I'm going to look at the US dollar for a minute here. I think you can give that some of the credit for the rally that you had here on this Wednesday trade. You had the US dollar trading 52 points lower, which is typically a bigger day in the US dollar market. So that thing has been towards the top end of the range that it's been in really ever since the middle of November. And if they want to reject that high there and trade the US dollar lower, that could give some traders a bit more optimism as to some foreign export demand. So I think the corn market is watching that one as well. And maybe the wheat market was paying closer attention to it than we realize as well.
And then moving on to the soybean market, I guess that's kind of been a lackluster trade, is how I would describe it. Um, is that is there any news or anything that you've heard in that market that can give us a direction on it, or is it just going to be more sideways chopping around here until planting? What are your thoughts on that, Vince?
I think it's more technical right now, but as we look at the beans, unlike wheat and corn, it did take out last week's lows from that Thursday report, which is a little negative. You've got plenty of beans in the world, so to speak. So I think it's going to see what it does. A little surprised on Wednesday had the big turnaround that you did, and I think meal was probably the one that let us down the last couple of days and the one that let us out of there on Wednesday. So let's see what they do every time you put a bottom in, if you can hold it the next time down. I think it becomes major support. And I think that's what we have to see at this point in time. Do I think beans could run 20 to 40 cents? Yeah, a lot more than that. Probably not without some fresh news.
And then is there anything, I guess, you saw on the charts there, Andrew, or any other information you'd like to add on that bean market?
Yeah, not necessarily on the chart, but I'm just going to throw a hypothetical out there for this planting season coming forward here in the next 2 weeks. So the acreage report last week said 90 million acres of corn. So, if a farmer has really good planting conditions, would it surprise any of us if a bunch of farmers decided to change their rotation, plant on an extra quarter of corn, switch it over from beans? So could you lose some bean acres to people going over to corn because they expect a rally on that acreage number? I think you keep that in the very back of your mind there, that you could lose some bean acres if you have the planting conditions that get people excited for planting corn instead, especially if you see a corn rally during planting season.
And then with that being said, is there any closing thoughts or any other points you'd like to make, Vince, before we wrap this one up, or markets we should look at?
The only other thing, going back to corn a little bit, we did on Wednesday, we did see our weekly ethanol report. We did increase production 5 million gallons from the previous week and up 7% from the same week in 2023, which is friendly. Still, our burden gets to be as those stocks, the trade was expecting this bean oil stocks to drop, and they were actually, the ethanol stocks to be up, and they were actually up 13 million gallons versus being down a couple million. And again, not a terrible thing, but I think it's somewhat reflective that our gasoline demand has backed off. And until we do that and get that picked up, it's going to be hard for those stocks to drop. But I think the production itself is telling us that ethanol industry is profitable.
And then over to you, Andrew. Same question. Any closing thoughts or markets we should be keeping an eye on, or interesting things you heard this week?
No, not too many super interesting things. One, people have been having fun watching it lately, of course, is the cocoa market. That thing in the last 5 years has rallied from $2,000 to $10,000. So quite a rally it's had there. I believe it was just last week, R.J. O'Brien, one of the major clearing houses out there in the commodities industry, announced that they were going to restrict how many positions a trader could put on of cocoa. Along with that, they were raising margin requirements to be larger than the exchange was requiring. So when you see stuff like that happening within a market, it certainly puts you on red alert that something's going on there that you might want to pay closer attention to. So I'm not saying go out and trade cocoa, but I thought people might just find that one interesting.
I think that'll do it for this week's podcast then. If we could be of any further assistance to you, give us a call at Farmers Trading Company. Our number is 605-996-6500, or check out our website, farmerstradingco.com, for more information, and feel free to subscribe to the YouTube channel. Thank you.